We have some breaking news as yesterday Jerome Powell, chairman of the Fed, spoke at Jackson Hole and shared the most important market news we've had in years. And one 15-minute speech moved trillions of dollars in all major world market indices and has given markets some hope for the upcoming months, which also showed up in rallies across all markets on the day and week, and that includes crypto. As you can see here on the crypto heat map, virtually all major cryptos are up with just a few down, but the market is trending green right now. And with this renewed excitement and strength in a weak macro backdrop, this may be your last chance to take advantage of a local crypto bottom and a potential rally into one special crypto, which I will reveal closer to the end of this video, where you could turn $500 into $11,500 in about 30 days or less. And that's based on its history and price action. So I'll state the reasons I think this crypto is going to explode and outperform the competition. So in this video, we'll discuss what Jerome Powell shared that was the most important market news we've had since 2022. We'll discuss how one of the most active Fed watchers and a reporter at the Wall Street Journal, Nick T, views Powell's statements and what that means for markets. We'll look into the Bitcoin halving history and how that data corresponds with the current market environment. And we'll be covering what the likely outcome for XRP is now with all of this recent positive news. And as always, before we begin the video, head on over to bullrunners.com and subscribe to learn how to take advantage of this all market solution. Doesn't matter if it's a bear market, bull market. Ultimately, you can put your XRP to work in the #1 play to earn XRP game in order to earn crypto. And yes, that crypto is convertible for XRP. So not only does it reduce your volatility and risk in the case of markets starting to dump, but it also allows for you to compound on your bag if markets pump. So you make more money and you can earn up to like 1,000 to 2,000 XRP per day. All you've got to do is subscribe, check that out, and I look forward to seeing you on the other side. So if you're feeling blessed and bullish, comment 777, and if you're going to be the richest person in your family tree, smash the subscribe button. Let's get into the video. Before we dive in, a quick reminder that the opinions in this video are for informational and educational purposes only and do not constitute financial, legal, or investment advice. All investments, including cryptos, carry risks and potential losses. Always do your own research and consult with a licensed financial advisor. We are not licensed financial advisors, and relying on our content for financial decisions is at your own risk. By watching this video, you agree we are not responsible for any losses or damages, and we do not guarantee any specific results or outcomes. Some of the links below may be affiliate links, and we may earn a commission, which actually helps support this channel and helps us to create value-based videos like this. We also hold some positions in the cryptocurrencies that we talk about, but that's only because we do what we believe in. However, this should not be interpreted as a recommendation for you to do the same. With that said, let's get into the video. So today, Jerome Powell spoke at Jackson Hole, and he was very dovish toward lowering interest rates for the first time since 2023. And in 2022, they started that rate hiking cycle, which markets really sold off into. And then they've had some time to, cool off on that news, and markets started rallying quite strongly. Well, as of recently, we saw the market tank a bit, and this is the S&P 500. But on the news from Jerome Powell today and how dovish he was towards lowering interest rates for the very first time, we can see that markets did rally. Now, Nicky T is someone at the Wall Street Journal who does follow the Fed quite closely, and he had a few things to say that I think are enlightening in terms of the current situation in the markets. And again, most people have been looking forward to rate cuts because this is potentially going to start to stimulate economic activity. When borrowing becomes less expensive, more people and companies are inclined to take on debt or to borrow in order to grow. So this is a relatively healthy and a positive development for markets, which again, markets being forward-looking typically start to rally into the expectation expectation of the event and usually sell off after the event. So let's see what Nick had to say. He said the Fed faces two paths for the coming months. Under one, officials could cut rates by a quarter point at each of their next few meetings, and that would be September, November, and December, and then speed up or slow down reductions depending on how the economy fares early next year. Now, the most important thing I want to zero in on is the fact that the challenge for the Fed is that officials generally have a high threshold for cutting rates in larger increments. They're likely to seek permission to do so either from much weaker than expected data, as occurred in 2001, or signs of a significant credit market stress, as in 2007. And that's not only included in terms of the credit market being stressed, but also the jobs and labor market being stressed. If we continue to see unemployment rise at the speed at which it has, then that is also a likely sign that things are worse than they might seem. And that might lead the Fed to want to lower interest rates more than a quarter of a point, maybe 50 basis points or even 75 basis points. Now, my personal theory is that they're going to try to stay in line on that first rate cut at a menial amount. In other words, they're probably going to do about 25 basis points, and that would be in line with market expectations. If they lowered faster or more, people might be spooked by that because it would be a signal from the Fed that things are actually worse than they might seem. So, for example, if we get a 50 basis point rate cut in September, that might be bad. If they have an emergency rate cut because some sort of a banking situation or a collapse, that would be very bad, and markets would sell off tremendously. So they're going to have to, quote unquote, thread the needle for a soft landing. It is a fabled thing that rarely ever happens, if it's never happened at all. And so the reality is they are playing in some dangerous waters. That said, here is what he had to say at his most recent conference at Jackson Hole.
Has cooled considerably from its formerly overheated state. The unemployment rate began to rise over a year ago and is now at 4.3%. Still low by historical standards, but almost a full percentage point above its level in early 2023. Most of that increase has come over the past 6 months. So far, rising unemployment has not been the result of elevated layoffs, as is typically the case in an economic downturn. Rather, the increase mainly reflects a substantial increase in the supply of workers and a slowdown from the previously frantic pace of hiring. Even so, the cooling in labor market conditions is unmistakable. Job gains remain solid but have slowed this year. Job vacancies have fallen, and the ratio of vacancies to unemployment has returned to its pre-pandemic range. It seems unlikely that the labor market will be a source of elevated inflationary pressures anytime soon. We do not seek or welcome further cooling in labor market conditions. Overall, the economy continues to grow at a solid pace, but the inflation and labor market data show an evolving situation. The upside risks to inflation have diminished, and the downside risks to employment have increased. As we highlighted in our last FOMC statement, we are attentive to the risks to both sides of our dual mandate. The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks. We will do everything we can to support a strong labor market as we make further progress toward price stability. With an appropriate dialing back of policy restraint, there is good reason to think that the economy will get back to 2% inflation while maintaining a strong labor market. The current level of our policy rate gives us ample room to respond to any risks we may face, including the risk of unwelcome further weakening in labor market conditions.
In other words, it seems for the very first time, not only is he dovish, but he's even made it directly clear to markets that they are ready to pivot. As this actually says right here, the time has come for rate cuts. We do not seek or welcome further cooling in the labor market conditions. So what they're really worried about is that labor markets continue to worsen while they continue to keep interest rates high. Further, the cooling in labor market conditions is unmistakable. And so this is something that they're really going to focus on. We're going to do everything in our power to support a strong labor market as we make further progress towards price stability. Now, in another enlightening tweet from Nikki T over here at the Wall Street Journal, he says, while Powell was forceful in laying out the Fed's goals, he offered no specifics about the precise way in which officials will deliver them to retain maximum discretion. He entirely avoided certain coded words like gradual and methodical, and that some colleagues in recent days had used to describe their expectation for a series of traditional quarter point rate cuts. In doing so, Powell's silence kept the door open to larger rate cuts if the labor market shows signs of greater weakness in the weeks ahead. So this is going to truly be an evolving situation, one that the whole world is going to be paying attention to in the coming weeks and into September. Again, my theory is it is because the labor market hasn't cooled off tremendously so far. What they're really going to do is going to try to do a quarter point, and then what's going to happen is they're going to do too little too late, and they're going to have to start dropping interest rates far faster to catch up with the decline in general markets. So if markets continue to see weakness and the labor markets see weakness, well then guess what? They're going to start to lower interest rates instead of 25 basis points, 50 basis points, and so on and so forth. And so this is always just the situation and the problem over at the Fed. Peter Brandt, a trader, just recently mentioned, my problem with the Fed is not so much that it causes volatility, but that the Fed has a pattern of too little, too late. The entire Fed board is made up of incompetent PhDs with no market sense. Then he goes on to post this chart that in 2021 through 2022, the Fed continues to say inflation is not a problem. The incoming data, they kept saying over and reiterating that it was transitory, that it would be here today, gone tomorrow, kind of like a train making its way through a station with a short stop. The Feds finally raised interest rates too late after not having done so when inflation started to run rampant. Then inflation went ahead and did. And guess what? By the point in time when things start to turn over, the Fed still doesn't lower interest rates. But again, everything is always a lagging indicator. In other words, by the time they act, okay, that is typically when markets are they've done too little, they've done it too late, and markets are already well on their way to some serious weakness and a major decline. And when the markets decline, that's when the Fed has to act rapidly by lowering interest rates at a far faster pace. So the next policy meeting is due on September 17th to the 18th. And that means by that point in time, we'll start to see, are the Fed going to lower interest rates? Will they keep them at the terminal rate of 550 basis points? What's actually going to happen? The theory on my end is that they are going to lower it by reasonably expected 25 basis points. And that would be the first rate cut in a very long time, which means markets are forward looking more often than not. They likely rally into something like that. And usually on the event of the rate cut, as Michael Hartnett, the chief strategist over at BofA, Bank of America, says, sell the first rate cut. So even if markets continue to rally into the end of the year, some point in time within a month to 3 to 6 months at latest after the first rate cut is when markets really start to decline. Markets being forward looking, they're thinking, oh, now things are going to start to get better. By that point, it's a little too late. And then eventually markets dump hard. And when markets dump hard, that's when the Fed is forced to respond by lowering interest rates at higher or faster paces. Which leads me to my point. I think the crypto market and the general markets might have some new highs left in them. Now, that doesn't mean that we can't just break down right now for a new low. And it also doesn't mean that we can't break above this previous range high for a new local high and then break down for a bull trap. Anything is possible and potential in an uncertain economic environment. However, markets took really good to this news today. And as you can see here on the price of Bitcoin, we did rally from a local high of $61,000 all the way up to $65,000 just on the day. However, in order for Bitcoin to truly break into new all-time high territory and start to build back into a healthy trend and get some upward upward momentum, it's going to have to break above this range here between $69,000 and on the later end $68,400. So whether we continue to rally for a bit and then hit it here, or we start to really pump hard here, it's going to be very telling. Is there strength in the market? We're probably going to pump really hard. If there's general weakness or it's not as strong, it might take longer to get there. Now, typically the longer the time frame, the stronger the breakout. So we have strength here, it'll break out hard and sometimes break back down quickly. If we have more time in the range, again, the longer the range, the stronger the breakout. The breakout might actually go further and farther before retracing. And sometimes if you get a retrace that doesn't break back down to a support in this range here, then chances are it's really strong. And that's a good indicator that you actually want to be buying on dips and retraces into the next major all-time high. Now, as you can see here, I do believe that the markets might need a bit more time, right? Bitcoin has not broke above that trend line and is currently still ranging, even though we did see some strength on the news today. That said, I have the line of Bitcoin in green and then the actual price action candlesticks being the price of XRP, okay? And as you can see here, they are relatively correlated. Now, that does not mean there is a 100% positive correlation. Every now and then, they'll move separate from each other for a negative correlation, which means Bitcoin goes down, XRP goes up, or vice versa. They are moving away from each other. But most often, okay, on negative news, if Bitcoin is dumping, it's likely XRP is dumping. If Bitcoin is pumping, it's likely XRP is pumping. So on and so forth. Pumping right here, dumping together in unison right here. Pumping, dumping, pumping yet again. So there is a highly positive correlation here, which leads me to believe that it's likely if Bitcoin does not break above its range right here and its downtrend, then XRP is likely going to struggle as well. Another thing that leads me to believe that Bitcoin and crypto are going to need a bit more time is the fact that I've looked at the halving cycle. And so back in 2012, you can see here, we had a previous all-time high beforehand. The market tanked pretty hard for upwards of like 80 to 90% here. And then when the actual halving occurred, we had a period of time where the price still stayed below the recent all-time high, then finally broke to new all-time high. So what I'm really after is the day on which we had the halving to new all-time high right here. In similar fashion, you can see halving occurred right here. By back here, right, all-time high, the halving cycle, the price was not at the current all-time high yet. It took a while to get to that previous all-time high range before breaking out to a new all-time high. Then what was the time frame from the halving to new all-time high? Similar fashion. Look, price was at about $10,000. Previous all-time high, $20,000. Okay, took a little while after the halving to break out to a new technical high, which was right over here, but this was our on-chain high. So now in similar fashion, look at this. What's really interesting is the halving occurred, right, after we hit a new all-time high. Most often the price is below the previous all-time high, which means the markets really rallied hard through 2023 and into 2024 by March on the ETF news. So it is very much possible we still need more time, but just about how much on average from the halving cycle. Let's look at it. So as you can see here in the orange lines, I do have those halving cycles and days that the price halved. And from the first halving to the first major all-time high, it took about 369 days. The next cycle from 2016 to 2017 was a very steady, strong uptrend, but that took a period of 525 days, and that was the outlier. And then the next halving cycle, price was well below the previous all-time high, but still took about 342 days, and then for the technical high, another 550 days. But I would argue it was closer to right here. So now that said, I did a little bit of math. And I figured, okay, well, what's a reasonable range, but also somewhere in the middle on an average? And the reality is, I would say the median or just around the upper end of that average would be about 375 days, which would bring us into April when we actually see a real all-time high on Bitcoin. And that would be on the low end. On a higher end, upwards of like 425 days, so maybe sometime in June. But usually by May, June, things really cool off in the markets. We start to experience a summer lull again, and things get boring. So I would actually expect us to see a new all-time high somewhere in the range of 345 days after the halving cycle, up to maybe, into late April, but by then we will actually see. So that still means, though, we have a lot of time for the market to start to trend up. And reality is, where could it possibly trend up to? Now, in the case of Bitcoin, from the previous all-time high to the low, if you toss a fib on there, and I am on a logarithmic scale, which I made mention of that in the actual tool. So I actually have to put it on a fib scale, okay? Fib log scale, I should say. From the local high to the major low, we saw Bitcoin trend to the upside at about a 1,618 for a $62,000 price, which was pretty solid, okay? However, when you really look at Bitcoin and how it's trended over the years, in the case of the longer term timeframes and charts, we've seen the law of diminishing returns. So the returns were extremely high back here. They were less high here. They were less high here, and they were even less high in this cycle. So the market is actually becoming weaker and weaker and weaker, even though it's becoming more and more adopted. And that's just because there's so much more money in it. It's harder to move the price in terms of many multiples. So if I were to take now a fib scale from the recent local high all the way to the next new high, okay, and by that I mean, the previous all-time high, then I would expect bare bones minimum us to hit that 1,272 level, which would be about $104,000 Bitcoin, up to max, I would say probably $176,000 on Bitcoin. And so even though, right, this feels like a very large move, the percentage gains are really not that great. I mean, from present day, we're talking to the major high at $175,000, you'd see about 172% return. On the mid range, you'd see about 100% turn, and on the low end, you'd only see a 63% gain. And so I would expect XRP to follow suit. If we see general weakness in Bitcoin, we might see a bit of weakness in XRP with a little bit of a deviation in terms of how they perform. Generally speaking, they're going to do around the same thing. However, over the course of this last year, XRP has wildly underperformed Bitcoin. Many people believe that's due to the SEC lawsuit, but now that we have clarity, there's, a lot of free air to the upside, if you will, which would lead me to believe that XRP could at least hit its previous all-time high, maybe hit $5-6, but by then the market cap would be tremendous. So in order for it to actually hit $11 to $14, which are some major highs, I would argue the market cap would have to be insane, and that is very much possible and potential, but the actual Ripple business model would need to integrate XRP into their underlying infrastructure at a global scale for that to occur. And this is what leads me to my theory. Most often, although you can get a lot of upside on major market cap cryptos, in terms of your actual percentage gains and what's actually going to create an environment for you to retire financially, you might want to go with something that might perform more strongly and has already outperformed the majority of those major market cap cryptos, which leads me to want to introduce you to Floki. Now, the reason we love Floki so much is because it is one of the strongest performing meme coins, not just in terms of market cap and size, but in terms of actual community and utility. When you take a look at the chart of Floki, it's actually quite impressive, with even one of the best, in my opinion, technical analysts, Axel Kibar from Tech Charts. He even recently mentioned, as of the 23rd of August, that Floki is in a horizontal support right now over a 5-month rectangle. So it has held its support and now looks like it's ready to trend up. So I'll go ahead and pull up the chart of Floki right here. And as you can see here, in 2021, this thing actually has history. It dumped pretty hard with the majority of the market. Since that point in time, it's been in a long, strong uptrend with a series of higher highs, higher low, higher high, higher low, higher highs, and has created a major cup and what looks to be now a handle. So if we touch this range one more time, it's highly likely we're going to break to the upside. Just how much will we break out? Well, if I take that same fib tool and put it from the recent major all-time high right to the top of this cup and handle range right here, and then bring it and drag it to the lows. Now again, I'm going to neglect the major lows because I want to hit as many points as possible. You can see that our major all-time high might potentially come in at about the the 1618 range. Now, why do I believe that? Well, because whenever Floki breaks out for new highs, it really pops off, right? It really has some strength behind it, as you can see right here back in January of 2023 to February of 2023, which was about a month's period of time. In similar fashion, we had another breakout for a high here, and this happened in 21 days. This thing moved really hard, really fast, made a major gain for people. And so I would thoroughly expect that if we hit this range one more time at the top of this cup and handle, then it's possible that we would see another major move upwards of from that range of about 1200%. But if you were to be keen and start to accumulate now, we're talking bare bones minimum 2500%, and sometimes even on the low end 23 to 2400%. So that said, the math is never perfect when you're grabbing drag and drop tools, and the math is never perfect when it comes to actual price action, right? You have to discount how traders are going to think about prices and moves and think about getting in and out with a lot of money before the thing is over, so on and so forth. But at the end of the day, this is not a bad time to accumulate. In other words, an extra $500 tossed into the price right now, if this thing breaks out to new all-time highs, could actually yield you at least $11,400 to $11,500 when we move up to that new all-time high territory. And that really wouldn't be that big of a deal for something like this, considering the market cap is far smaller than something like XRP or Bitcoin. So it can move, like this in terms of like a parabolic type move, but also we're talking 2,300% on a meme coin is just not that much, considering even from these lows right here to the previous high, we're talking 3,800% happened. So it's happened all the time in meme coins. Meme coins have been a very strong trending asset class in the space of crypto or a narrative. And so I could expect this thing to make a similar move in a period of at least 30 to 20 days. Now, Floki itself really does offer a stupid amount of utility. They also donate money to all sorts of charities. They're sponsoring sporting events all around the world. They have an NFT metaverse. They have a tokenization platform. They have a staking, Flokify, NFTs, prepaid cards through Google and Apple, and MasterCard and Visa. We're talking they have an educational deal. And finally, what I want to get into is their trading bot, which is designed to be on Telegram. Now, this is directly from Floki. If you go to Twitter and find out or find their username, Real Floki Inu, you can see here that they offer the trading bot, and you can get that through the link in the description below. It is very straightforward and easy to use. It's arguably easier than any other DeFi product out there. But what I found super cool, and a couple of the key features in terms of what they offer a super fast token purchase in a few taps and seconds on any device directly from a Telegram app. And they also have a referral program, which allows you to refer your friends and earn a commission whenever they trade through the Floki trading bot. In addition to the above key features, you can also unlock exclusive rewards by using the Floki trading bot. This includes airdrops, trading incentives, and special deals exclusive to the Floki trading bot users. So yes, there are a few other bots out there, but this one is by and far the best from a trusted source, and they offer all sorts of exclusive rewards that aren't available anywhere else. And on top of that, and this is what's really, really cool, the most anticipated meme coin launch of the year, Simon's Cat, allocated 1.5% of their total supply, which is actually quite a bit when we're considering, sometimes we have venture capitalists coming in and buying 1 to 2% of the total token supply of a major company for millions of dollars. It is actually quite a large sum. Exclusively to Floki trading bot users who trade their token with the Floki trading bot. Now, what is Simon's Cat? Well, Simon's Cat is a major brand across all platforms. It's arguably the most hyped meme coin launch of the year. Right now, Simon's Cat YouTube channel has 1.6 billion video views, 30 to 60 million views on each of their posts on YouTube and Facebook, 9.8 million Facebook fans, 6.3 million YouTube subscribers, 5.4 million Instagram followers, and many more. And you can even see here, I went to go also verify. You got to verify, right? Trust but verify is what they say. 5.3 million followers directly on Instagram. You can go to their YouTube channel, verify that. But this is massive. So it's not just a bunch of crypto people. This is a normal, recognized brand by a bunch of normies who've heard about meme coins and might just want to take advantage of an opportunity like this, which means yes, you are early and yes, you will be in first. Not only that, right, but you're actually going to get the CAT airdrop if you hold Floki, and you can actually either buy it directly through the trading bot, which we're going to show you how to do in a second, or you can go to Binance and do that as well. So literally, if you have a Binance account and you buy Floki and you hold at least, I believe it's 400k Floki tokens, which is really not that much considering the current price. That's about $50 worth of Floki tokens. You are going to get access to the CAT tokens. 900 billion of those will be distributed to qualifying Floki holders on Binance. And by the way, that snapshot is going to be taken on the 29th of August. So there still is time. If you haven't already bought Floki, you can do that on Binance or you can do that through the trading bot. We're going to show you how to do that right now. So go ahead and click on the link in the description in order to get access to the trading bot. And that's a great way for you to also get a referral code so you can actually share that with your friends. And you're also going to get access to all the exclusive airdrops and all sorts of other really cool features. But here at the Floki trading bot, here is how it works. So the first thing you're going to do is click that link and it should open up Telegram. The next thing you're going to do is click start. Okay, you're going to see a big old start button. When you do that, it should populate a message that looks like this. The next thing you're going to do is you are going to create a wallet. You're literally going to generate a wallet. So you see the generate wallet, then you click that and it literally generates you a new wallet. That's how simple it is to use. It's a lot simpler than a complex process where you have to write down all your private keys, so on and so forth. The next thing you can do is set it as your primary wallet by clicking that button. And when you do, you'll get a little ping and it'll literally confirm that your new primary wallet is this address. So then when you go back to the main menu, you might see something like this, and it might look or feel a little bit overwhelming and confusing, but it's pretty straightforward, guys. It's really not that hard. You just go ahead and click on the menu button down below. See that menu button right there? And it should bring up 4 options. One of them will be buy. Okay, you're going to want to click on that. So right here, you can see the menu has been clicked. You click the buy button right there. From there, you're going to want to search something like CoinMarketCap or CoinGecko. Look up Floki itself. Scroll to the very bottom of the page, okay? From there, you should see a contract. You're going to want to come back to the trading bot with the contract address, okay? And this would be the Binance Smart Chain contract address. So it would say, here is your BNB wallet, which means you're going to want the BNB contract address for Floki. Pretty straightforward, okay? But if you missed it, just go back to the previous portion of this video to watch exactly how we did that. We copied the BNB smart contract, entered it here, and now it's asking how much you would like to buy. From there, it'll say, okay, here is Floki, here's the market cap, here's the liquidity, okay, here's why it's safe, and then you're just gonna see that really quickly. You can scroll to the bottom and it'll say, how much would you like to buy? Okay, you need to send Binance or BNB to this wallet. So you're literally gonna send that to the wallet. You can click on 0.5 or 0.1 and it will automatically buy it for you. But it truly is this simple in 3 steps. You literally create a wallet, then deposit money into it, okay? Hopefully you understand that there's a difference between Ethereum and Binance. So if it says your wallet is BNB, like it does right here, okay, we'll go ahead and increase the size of that. It says your wallet BNB, then make sure that you're actually depositing BNB. If it says Ethereum, make sure you're depositing Ethereum. From there, you are literally gonna send money to that wallet address or BNB. Then you can enter the contract address that you find for Floki. Okay, and again, it's really straightforward. Go to CoinMarketCap, okay, search Floki, and this is a great way to get access to all sorts of other really cool promos and benefits and the CAT airdrop. Okay, from there, click on right here, more, and then from more, if it would pop up, okay, you copy that BNB smart contract, okay, and you're going to enter that smart contract into the bot. And when you do, you can literally just buy X amount. You can buy 1 BNB, 5 BNB, 100 BNB. It doesn't matter. There's deep enough liquidity. It's a large market cap, so it's not just going to move on your single buy of 5 BNB. So it's really safe. And it's also going to get you access to all of the other benefits of using the trading bot. So not only will you get access to the CAT token airdrop, not only will you get access to all sorts of exclusive bonuses and promos for using the bot and holding Floki and all the other things, but you'll also even take advantage of this amazing price action, especially if we break out above this descending triangle right here, okay? And as you can see, we've been supported, as Axel said. So when we break out here, and the volume is currently confirming it on the daily time frame, and even on the 4-hour time frame, you're seeing volume really increase into this move. So a breakout above this range will not only bring us to the previous recent range high at 0.00033, which would be a pretty large move, but it's highly likely going to break out to new all-time highs. So it'd be a great way to turn $500 into at least $11,000 plus. So I don't see any reason why you shouldn't take advantage of this. Go buy Floki, go get the trading bot, and thank you so much for watching the video. And if you haven't already, go to bullrunners.com to discover how to earn more crypto in less than 10 minutes per day with the #1 play to earn XRP game. Great way to put your XRP to work. So not only does it reduce your volatility, but you're actually able to add onto or compound those XRP bags into the next major all-time high. It's literally the best thing that we've ever seen when it comes to actually earning crypto that you can convert directly for XRP. And we show you how to do it on the other side in 3 simple steps. You set up your wallet, #1. You get your game pieces. You play the game for about 10 minutes a day, and you earn your crypto. So hit that link in the description below as well. And I look forward to seeing you in the next video, my friend. If you haven't already, subscribe and like the video, and I'll see you next time.